Hi everyone, welcome to my video presentation on leveraging fintech to enhance banking transaction service. Fintech is having a powerful impact on the transaction sector, providing new capabilities that have the potential to redefine the very culture of payments, driven by technology developments and the increasingly competitive transaction in the payments space. Banks are positioning themselves at the forefront of change and adopting new strategies in order to deliver enhanced client experience. With the corporate payments space braced for dramatic digital enhancement, fintech is not only altering payments, it's transforming banks' approaches to innovation. In our area of financial industry, technology innovation is transforming the payments landscape with new capabilities and developments that enable transactions to occur with greater ease, efficiency, and transparency. In many countries across the globe, domestic payments have gone or are in the process of going real-time and mobile. This is not only altering the payments process, it's fundamentally altering the behavior of consumers in terms of how and when they choose to initiate payments. Initially, many of the companies behind the digital finance and fintech applications were outside the traditional banking industry. For instance, PayPal is not a bank and is not subject to same regulation and rules that banks need to comply with. Although they are not technically part of the banking industry, the service provided by many fintech companies directly compete with those provided by banks and other traditional financial institutions. According to data from PricewaterhouseCoopers, nearly three-quarters of financial industry executives believe that fintech may disrupt the consumer banking industry. More than 80% of banks believe that they may lose up to 20% of uh, their customers to independent fintech companies in the next 5 years. Today's consumers have more payment options than ever before, from using credit cards to writing checks, from using domestic currency and to paying foreign currencies. In the past, companies that wanted to accept multiple payment methods had to take a certain degree of risk, rely on various payment processors, and pay high fees. Fintech is helping broaden the payment methods available to individuals and expand the payment methods that business can accept. For example, some fintech payment processing applications charge a flat rate for all credit card transactions. Others will let people pay in foreign currencies and charge a better exchange rate than the exchange rate offered by traditional banks. Now, people are more concerned about the security of their financial information than ever before. The security mirror commonly used to protect people's data, such as pins, may not be secure as you might expect. It's relatively easy to guess 4 or 6 digits. Fintech helps solve security issues by integrating biometric security measurements into certain programs. ATM can scan a person's fingerprint instead of requiring them to enter a PIN. Other forms of biometric authentication include voice recognition and iris scanning. Biometric authentication is a security process that relies on the unique biological characteristics of an individual for identity verification. Biometric authentication technology compares biometric data which has been confirmed authentic and stored in a database. A large number of technology-based initiatives and financial technology developments are being introduced to help transform cash and trade service. One of the developments is blockchain technology. Blockchain is a digital and decentralized public ledger that records all transaction information in chronological order. It's invaluable enhanced security and allows market participants to track transactions without a central record. The need to reform cross-border payments is growing, and many in the industry believe that blockchain can eventually play a role in the solution. Throughout cross-border the payment process, different parties need to make payment currency con conversions and deploy and manage liquidity in different jurisdictions, all of which are subject to different regulatory restrictions. Although online transactions are convenient, they are also susceptible to fraudulent activities. Fintech can be leveraged to detect fraudulent transactions by identifying patterns and warning the payer or suspending the transaction. In the event transaction was completed, Fintech can also help in the investigation to track the payment and to identify the recipient in a shorter time. Thanks for watching.